Howdy, everybody. Welcome to Liberty Call. I'm Raymond Dahlman, your humble host here, and it is Wednesday, June 18th, 2025. Hope you're having a fantastical day out there in the interwebs. Gorgeous day here in Colorado. Not rainy and cold like yesterday. Beautiful outside, and it's only in the 70s, so it's really not too warm. So, anyways, it is Fed Day or Fed meeting day. Everyone's on pins and needles. What did the Fed do? What did they talk about? So we'll get to that at the end of the meeting or the end of the show. And but we'll first get into all the markets and stuff. So. Markets edged higher as Wall Street digested the Fed's decision to hold rates steady and take a more cautious tone on future cuts. The Dow and S&P rose modestly, while the Nasdaq ticked up on strength in tech. Oil prices slipped as Middle East tensions eased slightly, and bond yields cooled in response to softer economic signals. Cautious optimism ruled the day, but the runway is still foggy. I would say that it's more like the Titanic. And there's fog and icebergs all around us. And, the people at the helm are not paying attention. They're having a few drinks, going down to the club and dancing. And, the guy in the crow's nest is up there going, hey, we're going to hit something. But the people in charge don't seem to care. Anyways, all right. Well, before we jump into all the news, I need some help from you. If you could, give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right, well, let's jump into the markets for today. Dow Jones finished the day down a tenth, 44 points, closed it at 42,171. S&P 500 was flat, down 0.03, down 1 point, closed at 5980. NASDAQ up 0.13%, 25 points, closed at 19,546. The VIX was down today 6.71%. It's at 2015. Canada up 0.07, Brazil down 0.09, and Mexico up 0.09. Jumping over to Europe, let's see. Germany down 0.5%. The UK up 0.11. France down 0.36. Netherlands down 0.38. Spain was up 0.08%. Same with Italy. Switzerland down 0.44 and Portugal down 0.79. Russian exchanges were both up today, up 0.05%. And let's see here. Asian markets, the Nikkei in Japan was up 0.9. Australia down 0.12. New Zealand down 0.09. In China, the Shanghai up 0.04, Shenzhen Component up 0.24, China A50 up 0.07, DJ Shanghai down 0.04, and Hang Seng down 1.12, and the Taiwan weighted up 0.73. All righty, so good stuff there. Let's jump over to the market recap and see what happened today. S&P 500 gives up gains to close flat on Fed's hawkish pause. I'm not sure that this is really a hawkish pause, more of there's really no reason to cut rates. I mean, I'm sure, well, if you're the president of the United States and you want, smoother sailing, for the short time or for the, for the short future, yeah, it's good. But it's bad for, those of us who hold dollars and, use the currency and such. So, anyways, all right. The S&P 500 closed slightly lower Wednesday after the Federal Reserve held interest rates steady at in the 4.25 to 4.5 range and signaled a slower pace of rate cuts ahead. The Fed's updated projections reflected growing concerns over rising inflation and weaker economic growth amid uncertainty stemming from President Trump's tariff policies and global tensions. Again, the inflation is not caused by tariffs. It's caused by the money supply going up, which if you were a client of mine, you would see every time we have a meeting, I show the current graph or chart of the money of the M2 and the M1, depending upon what was in use at the time. And so the money supply is going back up. That's why inflation is getting hotter. Tariff. Yeah. Okay. Although the Fed maintained its forecast for 2 rate cuts this year, it revised projections for 2026 and 27 upward, now expecting policy rates of 3.6 and 3.4% respectively. Economic data painted a mixed picture. Single-family housing starts rose 0.4% in May, but building permits, a key indicator of future construction, fell sharply, suggesting potential weakness in the housing market. Meanwhile, weekly jobless claims dropped by 5,000 to 245,000, though the figure still points to a gradual cooling in the labor market. Geopolitical tensions remained elevated. Iran's Supreme Leader Ayatollah Ali Khamenei publicly rejected Trump's demand for unconditional surrender, warning of irreparable damage, that's in quotes, should the U.S. launch a military intervention. Reports indicate Trump is weighing potential strikes on Iranian nuclear facilities, though he remained non-committal. If I could jump in here, what gives the United States the right to tell Iran that they can or cannot have, you know, nuclear anything within their boundaries? It is their country. Until they lob a nuke at somebody else without being provoked by Israel, we have no business. This is not our problem. If Israel and Iran want to fight it out, let them duke it out. Let's pull our resources back. I was just listening to Ted Cruz interview with Tucker Carlson, and he's like a complete POS rhino. He Israel's our greatest this and that. It's like, no, they're not. They use us for military, and sure, we get some help from their Mossad, but they shouldn't be spying on us in the first place. Anyways, back to the article here. In the banking sector, regulators are reportedly planning to reduce the enhanced supplemental leverage ratio, the ESLR, for the largest U.S. banks such as JP Morgan, Goldman Sachs, and Morgan Stanley. The adjustment could lower capital requirements and free up liquidity for Treasury trading. I thought they got rid of capital requirements for lending. So I don't know. I need to go back and look. In corporate news, Peloton rose nearly 2% after improving its financial outlook. Hasbro announced another round of layoffs to offset tariffs, and Circle Internet surged 20% following Senate approval of the Genius Act aimed at regulating stablecoins. The act is viewed as a potential catalyst for broader crypto adoption. Overall, markets remain cautious as monetary policy, geopolitical risks, and trade tensions continue to shape the economic landscape. That's some awesome news. Let's get on to a data report here. May housing starts via First Trust. This comes to us put together by Mr. Nate Guernsey. So let's see what this report said. In May, the U.S. housing market showed signs of strain as both housing starts and building permits dropped to their slowest pace since the COVID-19 shutdowns. However, the weakness was largely concentrated in multifamily housing, which plunged 29.7%. While single-family starts actually edged up by 0.4. Now, why would apartments or multifamily housing have such a large drop? Could it be that there's been a large group of people who shouldn't be here have left, which has freed up occupancy in the multifamily sector, so the need for fresh builds may not be there? Be curious to see if this is a trend that continues or if it's just a one-off. Brighter note was the continued focus on completing existing projects. Completions rose 5.4% to a 1.526 million annual rate, the 11th month in the past year above 1.5 million. Despite completions holding steady, overall starts and permits remain sluggish, stuck near 2019 levels since the Fed began tightening in 2022. Builders face multiple headwinds: high home prices, elevated mortgage rates, restrictive regulations, labor market shortages, tougher immigration enforcement, and uncertainty over new tariffs, all of which are weighing on sentiment. Well, if they need people to build houses, you got all these young people out in the world who are, waiting for that six-figure job to fall into their lap. Hand them a hammer and get them to work. Little sweat equity in the job market would probably be good for them. I did a crap job when I was 20 years old. I mean, that's just the way it is. Granted, it was for the military, but yeah. Meanwhile, the number of homes under construction is down 13.7% year over year, a trend historically linked to housing downturns, yet persistent underbuilding since 2007 suggests this cycle may be different, with limited supply still pushing home prices higher nationally. In labor news, jobless claims fell slightly, supporting continued, though slower, job growth in June. All right. And again, if you were to remove I'm guessing about 75 million illegal aliens in this country and their families, frees up a lot of space. All right. Next article up. From Zero Hedge, stupid, and that's in quotes, Powell does not cut rates as expected, despite diminished uncertainty and worse inflation. This comes Tyler Durden. So this goes through what the Fed talked about in their meeting, and then this last one is going to be the Powell video, which we'll go through that. All right. First up, let's see. The Federal Reserve held interest rates steady at 4.25 to 4.5 at its June meeting, as widely expected. This decision drew sharp criticism from President Trump, who had earlier called for a dramatic 2.5% rate cut. Oh my God, he is an idiot. I supported him all these years, but with the war stuff in Iran, he just lost my support completely at this point. So, if they want to impeach him, this is the perfect opportunity. You can have him thrown in jail for war crimes and everything else. So, but the cowardly Democrats will not do it, unfortunately, because they benefit too much from the war spending too. So they're not going to. They try to impeach him for dumb stuff like Stormy Daniels and loans for buildings and things like that. So. All right. Despite the hold, the Fed's updated economic projections revealed more stagflation outlook for 2025, lower GDP growth, 1.4 versus the 1.7 prior, and higher inflation, PCE at 3, core PCE at 3.1, and a rise in unemployment to 4.5. Yet the median forecast for 2025 rate cuts remained unchanged, although the distribution among Fed members grew more hawkish. 7 members now see no cuts this year, up from 4 previously. And again, I wouldn't cut rates until the market was down 40% personally. The so-called dot plot suggests more cuts in 2026 and 27, implying Fed views current inflationary pressures as temporary. Notably, current core PCE inflation is 2.5, as the Fed expects it to rise to 3.1 by year end before easing in subsequent years. Markets reacted with caution. Rate cut expectations for 2025 dropped, while bond yields and the dollar softened. Crude oil rose on geopolitical tensions, but gold remained flat. The Fed emphasized that while uncertainty has diminished slightly, it remains elevated. Analysts interpret the Fed's stance as expanding the range of potential responses without committing to a clear path forward, keeping policy flexibility intact. Overall, the Fed is navigating a tricky balance: inflation risks, geopolitical instability, and political pressure. While the central bank refrained from cutting rates, it signaled openness to adjustments in the future, depending on how inflation and growth evolve. Investors and politicians alike will be closely watching the Fed's next moves. Yeah. Again, interest rates should be set by the banks in the local areas. The Federal Reserve really should not be doing this. But, this is a system we're stuck with at the moment. All right. One last article, also from Zero Hedge. Watch live. Fed Chair Powell explains why he is not stupid. So, and you can go down here and watch the video if you want. At your own leisure. It's like an hour and 51 minutes. So I took the liberty of taking the transcript, feeding it into AI, and have it produce a summary for me because I am too lazy to sit and watch that stuff. Anyways, I got better things to do with my life. All right. So here's a summary of Mr. Powell's remarks. At its June 2025 meeting, the Federal Reserve held federal funds rate steady at 4.25 to 4.5, which we already know, maintaining its current monetary policy stance amid a mixed economic landscape and rising uncertainty surrounding tariffs. Chair Jerome Powell stated that while the U.S. economy remains fundamentally solid compared to everybody else, with strong employment and moderating inflation, recent trade developments and evolving risks warrant cautious, data-dependent approach. First up, inflation has moderated significantly from its 2022 peak, but it remains above the Fed's 2% target. Core PCE inflation stood at 2.6% and headline PCE at 2.3% over the past 12 months. The FOMC projections show inflation reaching 3% by year end, so things are going the wrong way, primarily due to recent and anticipated tariff hikes. Again, tariffs have nothing to do with this. Money, people's wallets are a zero-sum game, so if the price of eggs goes up like it did earlier in the year, you spend less, either you buy less eggs or you spend less on other things. So it's not like, where they printed the money out of thin air 5 years ago and dropped it out of helicopters. That, you're adding new money into the system creates inflation. So again, there's your Austrian economics dumbed down version of how this works. Where was I? Powell emphasized that while these inflationary effects might prove temporary, there's concern that they could become persistent depending on how businesses and consumers absorb the higher costs. GDP growth slowed in Q1 of 2025 to 1.4%, down from 2.5% in 2024. The slowdown was largely attributed to a pull forward in imports ahead of tariffs deadlines, which distorted trade data. However, private domestic demand remained firm and consumer spending showed resilience. The Fed projects 1.6% GDP growth for 2026. The labor market continues to show strength. Unemployment is at 4.2%, and wage growth is exceeding inflation, supporting real income gains. Powell described the labor market as quote, broadly in balance, end quote, with no signs of wage-driven inflation pressures. Still, hiring has slowed slightly, and job creation is more concentrated in fewer industries. The Fed stressed that policy remains, quote, modestly restrictive, end quote, and that is not currently planning rate cuts. Powell pointed out that inflation expectations remain well anchored, and the committee is not confident enough in the forward outlook to begin easing policy, especially with tariff impacts expected to push inflation higher in the near term. Again, he keeps blaming tariffs for something that he has total control over with the money supply, which it's hilarious that he continues to, push the blame off on somebody else. Again, and they created this problem 5 years ago when they increased the money supply by 40%. Again, they created the problem, and now they're standing around with their hands in their pockets going, I don't know what to do. All right. Throughout the press conference, Powell acknowledged that the uncertainty around inflation forecast is unusually high, particularly with unclear timeline and magnitude of tariff pass-throughs. The Fed is monitoring whether rising prices will affect demand or become embedded in long-term inflation expectations. He reiterated that monetary policy must be forward-looking and that the Fed is prepared to act if data clearly signal either further tightening or the need to cut rates. The FOMC also continues its 5-year policy framework review with updates expected by late summer. Powell noted that changes may include adjustments to the summary of economic projections, the SEP, and broader communications tools, but only if broad support exists across the committee. In response to questions, Powell downplayed political criticism and uncertainty around his reappointment, reaffirming that the Fed's focus is strictly on achieving its dual mandate. He also touched on emerging risks such as AI-driven job displacement, geopolitical tensions in the Middle East, and data quality concerns due to budget constraints in federal statistics agencies. Bottom line, the Fed is in a holding pattern, confident in the current stance, but deeply aware that the tariff-induced inflation, softening sentiment, and evolving economic data could shift policy in either direction in the coming months. So, all right. So it's basically a wait and see. They think inflation is going to heat back up. So plan accordingly. If you got to buy things ahead of time that you think that come from abroad, and you need to save some money on those tariffs. Maybe do it now during the cooling off period while they're trying to work out a deal. Because I really don't see China and the U.S. coming to any sort of real. I mean, I know that on paper they've said that they've come to an agreement, but until it's signed, sealed, and delivered, I don't trust them. All right. Well, that's everything that I had to cover for today. Whew. This was probably a day where I said something smart. So hopefully a lot of people watched today. All right. Well, if you need to get in touch with me about your financial planning or whatever in your life, where do you want to go? Doodle-doo-doo-doo, DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be glad to help. Hope everyone out there has a wonderful evening, and I'll talk to everyone again next time.